And those fresh concerns have turned equity markets negative today. We had, remember, after that Fed announcement initially, we had that big rally on Wall Street. It has all faded away towards the end, and Europe today is negative. Financials are very much in focus, and that has meant that the dollar, although it lost ground after the Fed rate cut, is trying to claw back some of those losses. So dollar yen going back up to 106.52 at the moment. Euro dollar, that's just slipped a little bit, 148.34. Sterling, 198.67, kind of actually where we were this time yesterday on that cross rate. And euro yen just edging a little higher, just above 158. Joining us for more, Peter Rosenstreich, Chief Market Analyst at ACM. Advanced in Zurich. Thanks very much, Peter, for joining us. Seems like the dollar's been very much swayed at the moment by what the stocks are doing in relation to monoline concerns. Where could this take the dollar in the short term?
Well, I think in the short term, what we need to do is, there was a lot of activity between yesterday and today, and the dollar basically ended up pretty much flat for the most part. I think there's been a lot of speculation about where the U.S. GDP is going. We saw that 0.6 number. And then the anticipation for the ISM and non-farm tomorrow is really building on, uncertainty on which way the dollar is going to move in the longer term.
Peter, hi, this is Christine here. Would you say that this liquidity crisis is going to be the catalyst that we will see an unwinding, a total unwinding of yen carry trades?
It is a strong catalyst. The volatility is obviously, one of the underlying factors, and the increased volatility that we've seen, just makes the yen carry trades just not the position that you want to be in right now.
Peter, Brian Shackman here in the U.S. I mean, the assumption, of course, was that you get a Fed rate cut and you get the weaker dollar, and then we have a little bit of a bounce back today. Were you surprised in the last 24 hours? And talk about your perspective about how the dollar has reacted to the Fed's cut.
Well, I think, probably, more specifically looking at that GDP, the Q-on-Q Q4 number, I think a lot of people rushed in and say, okay, that's it. This is the first sign that the U.S. is slipping into a recession. But on further, examination, you need to take a look at exactly, what's going on with, like I said before, the ISM number, which is a great indicator for GDP growth, and the non-farm payroll, which is also perhaps the bias is on the upside, looking at that ADP figure. Putting those into play, you have to start thinking that perhaps the U.S. is not going into a recession, and the initial pessimism that we saw in the market might have been overdone. And I think that's what we're seeing today, and we'll see continue, for the next, 24 hours, is a dollar sort of gaining on that speculation.
Peter, it almost sounds like, we might get to a stage where we think, hey, actually, the Fed, there might be some plaudits for the Fed and for the U.S. government, and saying, if they do stave off a recession, we should pat them on the back.
Yeah, well, I think, that's far out right now, because right now there's a lot of second guessing going on by myself and just about everybody else in the market. I think the sudden 1.25 basis point cuts in 8 days, really stinks of panic, and that sort of makes the market second guess exactly how the Fed is viewing, what's going on in the U.S. economy and their outlook on monetary policy. However, at some point, these enormous cuts need to start taking hold, and we'll start seeing a resurgence in the U.S. economy. And at that point, we'll start saying the Fed did a good job.
Peter, very quickly, we had housing data of the UK, nationwide housing data falling again, mortgage approvals dropping yesterday. The housing market in the UK under pressure. What happens to sterling here?
I've been saying this for quite a while. I think the sterling needs to come down further, along with the interest rates. The BOE sort of stubbornly holding rates a little bit higher than they need. And they need to come down more aggressively, quicker, to follow the Fed's lead. And the way to shore up the UK economy is to do just that. So I think we're going to see the cable come under some serious pressure in the near future.
Peter, thanks for that. Peter Rosenstreich, Chief Market Analyst at ACM. He's a Giants fan, so we wish you the best with that support in the Super Bowl on Sunday.
Thank you very much
Peter.
for that.